What's up, guys? What's going on, Postcase FX family? I hope you guys are all doing good and welcome back to our YouTube channel. We really appreciate it, guys, to have you back once again here. And also, would like to thank you all who just subscribed to our YouTube channel. If you have not yet done so, please kindly hit the subscribe bell and turn on the notification icon so that you will not miss out our next concept when we upload our next video. So guys, in today's video I'm going to share with you my day trading strategy experience which I have experienced while I was trading, and some of the mistakes which I have done which you can also be experiencing, and also this video can be a good video to watch to rectify your mistakes. So if you are new here, we also talk about spark money concept, ICT concept, and order block strategies. If you are looking forward to learn about those concepts, you are most welcome to join the team. So guys, the first thing which I do always when I open my chart, right, I go to my monthly time frame to understand my swing highs and my swing lows. So as you can see here, guys, we have GBP USD and this is our monthly time frame, right? You can see that we had this swing high here, and also this was our swing low, and then the price have created a new swing low than the previous low, something like this, guys. Let me zoom in. Okay, something like this, as you can see, and then the price came back to this swing high, creating a new lower high, right, mitigating this swing high right there. And then the price started going down, meaning when price start going down, this swing low right there will now become a weak low, right, meaning it will now become a target low right there. So when price is going down, right, we have to understand that while the price is going up or down, they create those opposite candlestick which our base area, right, which resemble our base area. As you can see, you can say this was our higher time frame demand zone area, as well with this one was our higher time frame demand zone area. So this will help you to understand where the price will go ahead next. As you can see, guys, we also have a break of structure, right? The first thing which you like to see when you see a break of structure, you like to see a demand zone. And then if you are able to identify your demand zone or your last opposite candlestick, you know that the price will come and tap in and then shift the market going up. But you can see here, guys, the price failed to fill the orders of buy orders, right? And then the price came back and break this zone area, meaning you now highlight the last turning point, which is this one. It will now become our supply zone area. So this will now become our supply zone area. Why? Because you can see the price came back to the demand zone, and then they have given you a rejection candlestick, meaning they have formed the opposite candlestick. But also we had this one was the opposite or the last lower high, which we wanted to see price taking it out, and then we'll now expect the price continue going up. But they failed to take out that zone area, but they mitigate it and then shift the market going down, meaning it will now become our supply zone area. So if we now go back to our weekly time frame, right, we now refine these demand zones something like this. Now we now refine these demand zones something like this. As you can see here, we also had a rally base rally, meaning this is a base area. That's where you look for your for your buy orders around this zone area. So if you are able to identify something like this, if you like to take your trades in a right entry point, you can use premium and discount. You can see that we had this discount level and the price we have came back to mitigate that zone area and then started going up, meaning you can also minimize something like this, so that if you go to smaller time frame, you know that this is your discount zone area where you can also expect the price to come and tap in and then shift the market going up. as you can see, this demand zone area was being taken out. We also have this supply zone area right there, meaning it's still a higher time frame because we are still in what, in weekly time frame, so it's still a higher time frame supply zone in. So to validate all of these supply zones areas, you want to see a change of character. You want to see a change of character, something like this, right? Something like this. If you are looking for shorts, you look for something like this, and then if you are looking for logs, you look for something like this. You look for something like this. All right, that's when you can validate these supply and demands areas. So as you can see now, we have to highlight this zone or refine it, something like this. As you can see, the price was mitigating all of those lower highs, but this zone was left unmitigated, meaning if price fails to hold this one, they'll come to this zone area. So you only validate this once you understand the price approach, because the price approach, that's the most important key to this supply and demand, meaning you want to see a correction while the price is coming back to your what, to your supply or demand area, something like this. That's when you can say this is a nice price approach, and then you look for change of character and the price will continue going down, breaking those swing lows or lower highs. So if you see now price rejected here, you now refine to your daily time frame, because in daily time frame, that's where you like to understand if price is now going up or down. So as you can see here, guys, we also have a break of what, break of structure right there, meaning this was our break of structure, right? Break of structure. And also, as you can see, this was our supply zone area. So for you to validate this supply zone area now, you have to understand the price approach, because if the price approach is something like this, let's say the price have created something like this, and then the price will just come something like this, that supply zone will now become weak supply, because price can also do something like this and break it, and then that's when you can expect a correction, right? A correction, something like this, and then the price will pick the orders, give you another change of character, and then the price will continue going up now, because they will change the character after breaking this zone area, meaning this is where our last lower high is at. And you can see, guys, the price approach here was bad, but for me, I was looking for sales. So that's why I was telling you guys, I'm going to show you some of the mistakes which I made, and also I'm going to show you how to rectify those mistakes. So this was my supply zone area right there. So what I did, I highlighted my supply, something like this. I marked my high and marked my low, and then this was my what, my discount zone area, and then I've deleted this. And you guys, you know that once you identify a supply zone area, you want to look for what, for change of character. As you can see, they even give us a rejection candlestick while the price came back to this zone area, and I'm going to tell you why they have given us this rejection candlestick right there. So if you now go back to A4 time frame, right, you now understand that anything below a break of structure, we do not trade, right? We do not look for shorts, anything below a break of structure, meaning this was our break of structure right there. As you can see, this zone will now become a liquidity, because it's after a break of structure right there, after a break of what, break of structure. So it will now become a liquidity zone area. Let me put it at top. Okay, so it will now become a liquidity, meaning the price will not respect this zone area, because that's where some of the retail trader look for shorts around this one area, because there's also a drop based drop. So now, as you can see guys, we had this imbalance candlestick, meaning what you have to do is to highlight the high and highlight the low, and then you can see they just came back to the 50% retracement, meaning this was our first supply zone area as a breaker blocker, right there. And also knowing that there was an imbalance right there. So now you can see the price rejected, meaning we had a break of structure and a change of character in 15 minutes time frame. And I'm going to show you how you were going to look for your entries. But before that, we also understand that we have to understand where the price is coming from, right? So let's go to a 15 minutes time frame. I love to use 15 minutes time frame because that's where I look for my entries, right? That's where I look for my entries. So what you have to do now is to understand your liquidity zones in smaller time frame, and also understand where the price is coming from. So if you are going to take this first order block or this demand zone, which we have found in bigger time frame, you're going to do something like this. This was going to be what? Your swing lower high, the swing lower high. You can do something like this, right? You can do something like this, the swing lower high, and also this was your lower low, right? And then the price have given you a new lower low, meaning here we had a break of structure. In other words, this will be a break of structure, and this will be your what? A change of character, something like this now. So as you all see that we had a change of character, as this was our lower high, right, in bigger time frame, because that's where the price will decide to go down, and they've given you a break of structure. After a break of structure, you want to see price mitigating the supply zone, which will break the structure. And you can also see that guys, we had a drop here, drop, base, drop, meaning this was the first break of structure right there before price going up, right? Something like that. So this zone now will also help us in future. It will also help us in future, meaning that's where the first change of character was being made right there. Let me delete this, what I was doing there. Okay, so this will now become our first change of character, and then this will now become our break of structure for confirming the continuation pattern. So as you can see, we have a change of character here, and our break of structure was down here because here was a break of structure, but you highlight this one. And also this was our what? This was our break of structure, confirming that the continuation trend has started. So now as you can see that there was none other opposite candlestick, but we had this supply zone area which was left unmitigated right there, which is a demand zone area. But let me just highlight, let me highlight it like a demand so that you understand, but I usually put 50 minutes. So I'll understand now this was our demand zone area right there. And also as you can see guys, we had this week on this break of structure or a change of character right there. So you highlight the high of this candlestick, something like this. Why? Because if we use our premium and discount, we have something like this, because here was the first turning point, meaning that's our higher high right there which was formed. And you can see if we highlight the low of this low here and the high of this high here, right, of these new highs, we now understand that this will now become our what, our demand zone, because it's below the what, the discount level, not the premium. So that's where you can also look for what, for longs. And you can see, guys, the price came back and they did give you a good move, right? You can see we had a break of structure right there, right? A clean break of structure, change of character. This first what, opposite candlestick was being taken out here. So if you see something like this, here will be your entries, right? Here will be your entries right there, right there. Meaning, if you highlight this zone area, something like this now, if you highlight this zone area, something like this will now become your first take profit. And now, if let's say you use 15 pips, like what I do, or my maximum is what, 30 pips. So our SO was going to be there, or you're going to use 15 pips. All right, it depends on how much you are willing to risk. So once you see something like this, you understand that this was going to be our first take profit. And you can see the take profit was going to be smashed. As you can see, the first take profit was going to be smashed, and the price didn't stop there. The price continued giving us a continuation pattern, meaning we had a break of structure right there, break of structure, and then the price failed to give us a pullback to mitigate this what, this demand zone area. As you can see, they were mitigating those zones area before they even go up, but this one they just missed with few pips right there, as you can see. So now, while the price was going up, right, if we go back, let's go to H1, let's go back to H1. Okay, we can see that we had this supply zone area right here, guys. We had this supply zone area, something like this, guys. As you can see, this was our supply zone area, but it's below our break of structure in daily time, meaning it's a liquidity zone area. So we expect the price to go down or to break this zone, but it's a liquidity, we do not trade it. So once you see a break of structure, because we had a opposite candlestick, you see this mini opposite candlestick, and then price continued going up, meaning this was now a demand takeover. Why? Because the price failed to fulfill the orders on a supply zone, so the demand have to take over those orders to fill the orders, right? So that's why the price came back right there. So as you can see now, if we go back to H4 time frame, right, we can now see that the price even reached the imbalance zone area now, and then give us a pullback. So this pullback was just coming back to mitigate this zone area, which now have flipped to be a what, a demand zone area. And this was a failed supply zone area, orders being filled as what, as demand right there, as you can see. So we can call this zone a demand zone area. So for me, I was waiting for my trades around this area right there, because they left this zone without being mitigated. So when I do my back testing and when I saw something like this, that's when I start that the price just came to fill the orders on this side and then shift the market as a continuation pattern, as price is now on a bullish momentum. So you have to understand that. So the price came back, and they also did give us a good entry point to take this zone area. As you can see, we had our break, our change of character, can't say break of structure. So this was our change of character, and our break of structure was made below here, but you can only see this break of structure in 5 minutes, because now we are using 15 minutes, and you can see this was the last opposite candlestick, price coming into the what, to the demand zone. So you can even use the premium and discount by highlighting the high and the low. You can see something like this, but they failed to come to the entry point with few pips on it. But if you use the change of character, you're going to take your entries. As you can see, the price have created this space area right there. That's where you were going to what, to look for your entries. And you can see they give you a change of character, come back to mitigate this zone, then they continue giving you a continuation pattern, come back again. Also, they did come back to mitigate this order block or base area or demand zone, which was now created right there. And then the price shifted going up, as you can see, and then the price fell to hold on this zone A. So the other thing which you have to understand, you have to understand the price approach to that zone area. You have to understand the price approach. So if you see this type of bullish momentum, that zone area will now become weak and also being targeted. So they will break that weak high and then continue giving you a continuation what, pattern. So now, as you can see now, the price also have taken out this supply zone area, meaning now you now focus on the last what, on the last opposite candlestick. Let me just use it as a supply zone area, something like this. Okay, so what we have to understand now, this is a failed supply zone area. So we'll go back to our bigger time frame, because that's where we'll look for our entry. And you can see that we had this opposite candlestick. The price just failed to come and pick the orders at this momentum with only few pips. As you can see, only few pips right there, meaning the price can also may come back to mitigate this zone area. As you can see now in H4 time frame, let's go back in H4 time frame. This is what we have now. This is what we have. So what we are expecting now, we are expecting the price to take out this weak high, because it will now become weak because of this price approach right there. So also we have a supply zone inside, which is not yet being mitigated. So we wait for the price to give us something before looking for our entries. As well, you'll be focusing on your daily time frame, because now you understand the price is coming from the major demand zone which we found in our monthly, and then we refined it to our weekly time frame, and they've given you a nice move from that zone area. So this was the last lower high, so that's when you can expect the price to do something like this. Now, as you can see, we had a rejection, right? Something like this. You expect the price to check out this zone and then correction, right? Expect correction, change of character, and then continue looking forward for our longs, something like this, guys, right there. So you can see we have this opposite candlestick, meaning it's our base area. The next thing which we expect is the price to come and give us a change of character. But you can also, what you can do, you can also do something like this, highlight the high and the low, something like this, and then focus on this zone area right there. Right, you can now focus on this zone area, something like that. Then you can also delete this premium and discount zone. You can now see that this will be your what, your zone you have to target now. So let me delete this. Now you can see we also had this opposite candlestick here, which was formed here, and it was being taken out, but the price even give us a bullish momentum, meaning there was no opposite candlestick. So what we can expect now, we can expect the price to go and take out this zone, but we'll look to our left side. If there's a supply zone, then the price may also do something like this, giving you a correction, something like this. Then you expect a change of character, then the price will continue going up to those supply which we have found in our weekly as well from the monthly time frame, something like that. So I hope you guys understand this video. I hope you have seen some of the mistakes and how to rectify those mistakes. We're gonna bring more episode on this concept. I hope you guys have a blessed day. Thank you.